keynote panel that we will have now, which will be moderated by Maria José Subiela. Please, if you can actually join us. Maria José is a strategic advisory, ESG strategic advisory at SLR Consulting. The panel is quite innovative because it's actually going to be turning about, again, the low-carbon energy transition, but with a series of very interesting and distinguished partners here. You have Namrata Thapar, Global Head of Mining at the International Finance Corporation, if you can join me. You also have Dean McPherson, Global Head of Mining at TMX, who will join us. I was extremely ungallant. I should have also mentioned Katya Gorbatiouk, first Head of Funds Primary Market and Sustainable Finance Committee at the London Stock Exchange. And finally, to round it up, we also have Pavel Brůžek, Chief Executive Officer at Draslovka, that will help us understand and participate to this conversation about this transition to a low-carbon economy. Please take it away from me, Maria José, and I'll be here in case of any needs.
One more sofa. Well done.
It's fine.
Yes, good. Good morning, everybody, and I hope you are as excited to be here as I am today to discuss how the mining industry can support the low-carbon energy transition. And we know this is one of the biggest challenges facing humanity, and I'm delighted we have such a brilliant panel, which has already been introduced today. So why don't we start with a question to you? If you have your smartphones, we are going to put a poll up there. Yeah? So what do you think is the biggest force in driving the low-carbon transition in the mining sector? Is it governments and regulators? Is it capital providers? Consumers? Is it the industry itself? Let's see. What do you think? Okay. Wow. We have a clear winner. Capital providers, customers. Okay. Well, have you all voted? Oh, government and regulators are going up. This is almost like a football match, isn't it? There you are. Well, capital providers in the lead. Okay, we're in the right place to discuss this today then, and we have the right panel. So let's get started. Pavel, may I start with you?
Sure.
Yeah? So many of us would argue that the world doesn't understand the role of mining in a transition to a low-carbon economy. What steps do you think the mining industry can take to change public perceptions?
Yeah, first of all, I agree with the statement. Second of all, I think there are like three things I think we should follow. Number one, honestly, I think that mining industry is one of the most underappreciated and underfinanced sector that's out there, which is actually also presenting a very good investment opportunity for all of us in here. But we should basically approach it like from the angle of trying to like get financing back into mining. Like so, number two, I believe we should take back the control of the narrative behind mining, especially in PR, because we are living in 21st century, and with social media, with internet, and with pretty active social groups, we basically no longer can use this low-profile policy and low-profile PR strategy that mining was like following in the last 20 years, and we should try to like speak about the obvious. And last but not least, like we should like tell the narrative, and we should tell the truth that sometimes is not very fancy, which is that mining is totally essential and irreplaceable part of the 21st century economy. It's actually the most critical piece in the supply chain that's currently set there for delivering on 21st century targets that are set by our governments and by the institutions and by our investors. And if something is critical and irreplaceable, it's our duty to do it as sustainably as possible and like come back to our governments and to our investors and tell them like, well, there's a way to do it better. Like this is the industry that's always going to be out there. It's underappreciated, it's underfinanced, and it's time to change that. Otherwise, like we cannot get from the point A to a point B because we set like where we're going to get with all these green policies and green deals and like anti-inflation policies currently in the US. But we kind of forgot what kind of supply chain we need in order to get there. And I think this misrepresentation and like misalignment between what we want and what we need to get there is pretty obvious, but we need to join forces in order to bridge that gap and start delivering on demand and supply. Because people forget it, it takes only 1 to 3 years to build up a battery production factory or EV production factory, but it typically takes 7 to 15 years to build a mine. And it takes hundreds of millions to billions of dollars to do that, and big fights with regulators, with governments that we just seen in the pool, with social, with the communities around the mine. And mining really became something of not in my backyard, while it's essential. So we need to address like all these pain points for the future. So in my understanding, these are these 3 steps. Take control of PR, like try to improve on what we do and how we do things and how we communicate with people. And last but not least, get better in how we do mining and how we, and get better in efficacy of mining that we currently, and in technology that we're currently using.
Excellent, thank you. What's your take, Namrata?
We've been hearing a lot over the last many years on the need for the mineral industry in the low carbon transition. And I think over the years, ESG was a big topic, and now decarbonization in the last couple of years even more so. But I think in my view, stakeholders have increased as well for the mineral sector. And what do I mean by that? And that's where I think the mineral industry or mining industry needs to focus a little bit more on, is really trying to be more cohesive and working with this increased stakeholders. And who are they? They're probably the battery manufacturers. They're probably the energy suppliers. So the cross-sectoral integration, in my view, is really, really urgent and needed by the mining companies as well as the others. So, for example, if you want to bring renewable energy, whether it's solar or wind or hydro in your energy mix in a mining project, then you really need to find ways to also work with the energy companies, right? So I think that's critical, or whether it's transport is another one, transport companies. So for me, I see that as a key need in the mineral sector right now, is to work cross-sectoral and work in cohesion to bring scale, because in order to reach our net zero goals, we will need to do that. And I think secondly, building on Pavel's, is the financing, but also increasing the need to finance the energy transition. So the mineral sector and the mining companies are key catalysts in many of these countries as the main anchor and generating cash flow for that country. So they're really, the mining company has the power to really change and bring innovation to the country, and support with the government. So working with different stakeholders is more and more critical, and then getting that message, as Pavel said, get our messages across, and no longer be considered as, a industry that is only hard to abate, but actually can take the steps.
Excellent, thank you. And you mentioned finance, so maybe Dean, we can ask you what kind of finance ecosystem do to support the mining industry journey to net zero?
Thanks, Maria. Certainly, I think as the center of the mining industry, really, the Toronto Stock Exchange and the TSX Venture Exchange recognize that we have a significant role to play. And, my perspective is really one from mining companies themselves, having spent close to 10 years in mining myself before joining the exchange. And, the mining companies in general have been quite active in the way they operate and recognizing their impact on the communities in which they operate. What we've not been so great at is embracing the need to communicate what we've been doing. And I think a large part of the resistance to mining that Pavel outlined in his opening comments there has really to do with communication. And I think one of the benefits of this ESG focus that we've seen over the past few years that you mentioned is that it has been forcing mining companies to be more accountable, to be more proactive in communicating exactly what we're doing, disclosing, etc. As an exchange a couple of years ago, maybe just over 3 years ago actually, we recognized this trend and certainly recognized all the indicators that investors were now demanding that mining companies disclose what their ESG policies and practices. And so we took it on ourselves to implement what we call ESG 101 platform, because at that time a lot of it was not known, particularly to the junior mining companies who were often focused on raising capital and exploration, development, etc. And so we saw the responsibility to step in and provide a central location for companies to access information, to access best practices, to actually learn about what is this ESG thing all about, and explore each of those, the E, the S, and the G. And it's been extremely successful. As well, it's something we offer to companies not only listed with us, but also companies considering listing with us. So this is just an example of course, of what the steps that we have taken proactively to help our issuers understand and navigate this new world where ESG and the focus on each of those elements are critical to their ability to raise capital, because as we all know, particularly in Europe, certainly as leaders, Europe has been leading the trend where investors are finding that the ESG consideration is a key investment decision. And as I said, for us, it's just stepping in and making sure that our issuers are prepared for this new challenge, this new demand.
Excellent. Anna, Katya,
I
what do you
would
think?
I would like to echo Dean's comments, and I think that based on what we've just heard from Pavel about the role that the sector will play in energy transition, it's ever so more important for the capital to have access, for the sector to have access to the capital it needs in order to embark on the ambitious transformation, and in order to adopt new technologies and lower carbon operating models. And it is in everyone's best interest that this transition takes place on public markets, where companies are subject to more robust corporate governance, more robust investor engagement, and held to a high standard of reporting. And it's not in everyone's best interest if this disinvestment approach pushes companies into opaque jurisdictions and into opaque markets. So we have a strong conviction that financing green transition is not just financing green assets, and therefore we have worked hard to create the necessary infrastructure to support high-emitting sectors on their ambitious journeys. It's with this type of thinking in mind that we have launched our dedicated transition bond segment, where companies can raise finance aligned with a transition aspiration. And we have also recognized that sustainability is not just about measuring the units of emissions, but it's about a set of behaviors, corporate behaviors. And for that, we have launched our own framework called the Climate Governance Score, which is a tool for companies to assess their, the extent to which they integrate climate consideration into their target setting, into risk management, into corporate governance, and how they compare to their peers, and how progress is measured. And this is the same methodology that's used by the Transition Pathway Initiative, which is a coalition of the biggest asset owners who in turn empower asset managers to drive transformation. I would also like to say that over the past year or so, we have seen the further evolution of the conversation of what constitutes sustainable investing. And that is evidenced by the FCA new proposed labeling regime for sustainable investment products. So if you look at it, in addition to the sustainable focus and sustainable impact, we have a category called sustainable improver, and that specifically addresses assets where improvement can be achieved as a result and in response to asset stewardship activities, so recognizing the power of investors. And then finally, the way investors engage with heavy emitting sectors is changing. The conversations are becoming more granular. It's not just about the numbers, but it's about the trajectory of improvement. And these conversations are taking place not just at the sustainability level or the IR level, but increasingly at the strategy level and at the board level. And then echoing what Namrata said, it's the engagement is taking place across sectors, driving and encouraging cross-sector collaboration and quest for common solutions, and in turn engaging with the regulators and the governments to support this type of collaborative effort. So in a nutshell, the quality capital is the capital that will be aligned with where the society needs to be 10, 20, 50 years from now, and the capital that will drive some of this transformation using the power of their asset stewardship activities. So it's in everybody's best interest that this transition takes place on public markets, and that the role of this responsible and impact-oriented capital is maximized, and the success will be measured by how much the sector is able to attract this type of capital to deliver the benefit to the society.
Thank you, Katya. Excellent. And Pavel, you mentioned PR, controlling communications, but also better mining.
Yeah.
So how far along the energy transition roadmap is the mining industry? What have been the major achievements and the roadblocks?
Yeah. Listen, let me quickly react on what was here first, because I think it's a great thing to say at the beginning. Going back and just reinforcing the argument, on contrary to what some people and media think, we are still not living in the Harry Potter's land, and we cannot still make medals with a swing of the magic wand of thin air, right? And it's a narrative that I hear every single time, and then you hear the second narrative, let's recycle, and we heard it even today. We cannot recycle things that were not even mined yet, right? So if it's not out there, if it's not getting back into the supply chain, we cannot recycle that. So in order to meet demand and supply, we need to do better, right? So it's basically inheritedly connected to how well we communicate the story, because then everything will start working. If we take back control of the narrative, it will start working. It will start resonating with the investors, because it was really one of the no-man land for many people. So how far we are in getting there? I would say we are doing progress. However, there's still a lot of work ahead of us. I'm happy to say that there's many players, and some of them you've seen on the panel today, and you will see over the next couple of days. They are doing very significant progress in generating renewable energy, getting getting their fleets electrified, getting their machine electrified, and basically operating with a better efficacy. But we need to keep in mind 80% of energy that's currently consumed in mining is actually being consumed for breaking the rock and moving the rock. And that's a lot of energy. That's basically a massive piece out there. And we need to then say that actually a big portion of that rock that consumes that energy, and it's hard to actually do something about that. We can increase the efficacy, but it's still not there. A lot of that rock is then useless with the current technology, because it's a low-grade material and it can be processed into minerals, or it doesn't make economic sense to process it into minerals. So what we can do about that? Well, we need to innovate, and this industry needs massive innovation, and it couldn't innovate because where there is very little money, there is little innovation, and there is little motivation to actually innovate. So with more investment, there's going to be more innovation that's desperately needed, and how to innovate and what to do there. Basically, we need to bring sustainability. And when I say sustainability, I mean both. I mean the environmental sustainability as well as financial sustainability, because there's not one without the other, because otherwise it will collapse within a couple of years. And second, public image, right? Again, public image of the mining segment. So what to do about that? Well, we can actually try to bring and empower the mining industry with the technologies that are able to actually process a low-grade material, because it's out there. Instead of entertaining ideas like deep-sea mining, or even better, mining meteorites and things out of Earth, we should focus on what's already there, right? There's massive amounts of low-grade material, massive amount of tailings that are actually sitting as a liability in most of the balance sheet of the companies, and turning that into the asset is actually bringing a lot of new minerals on the market and actually with a fundamentally better sustainability score. And it's something like on which we, for example, focus at Draslovka, like trying to empower the businesses with technologies through innovation that will allow the businesses and mining sector to actually mine and treat something that was formerly untreatable. My colleagues will be speaking about it on the specific sessions in here as well, because that's actually, I think, at least in my opinion, one of the ways of how we can make mining fancy again, via technology and innovation. But we cannot just speak about it and show it, but we need to basically have the guts to actually come there, get the innovation at work, right? So, because honestly speaking, mining industry is, and we are, quite conservative industry, right? We don't like to take the risks. But right now, because we don't want to lose the precious metals, we don't want to take environmental risk, we don't want to fix things that are not broken. But right now, it's the time, more than ever, because governmental pressure is there, regulatory pressure is there, investor pressure is there. You heard all that about how the mining and how the metals will be looked at from the sustainability point of view. And this is the time to actually take some risk, do the change, and start applying new innovative ways of how to make mining more sustainable and more fancy in the investors and public eyes and public perception.
Thank you. So I'm hearing that there has been progress. It's time to accelerate. And for that, we need innovation.
Cool.
And to turn, I love what you said about turning liabilities into assets. And innovation both in technology and also in financing. What do you think, Katya, in terms of innovating in financing?
Well, I think that this is the time when the entire financial system is seeking ways to innovate to support its stakeholders. This was the thinking behind the London Stock Exchange launching our voluntary carbon markets. It's driven by the objective to support our issuers, particularly the ones in heavy emitting sectors, with further ways on how to accelerate their pathway to net zero. So we have recognized that, of course, the focus will be on addressing the core decarbonization strategies, but when it comes to unavoidable and residual emissions, companies are facing the challenge. Offsetting has been recognized as a viable part of net zero plans, whereas previously it was viewed with some negativity. It was recently acknowledged by the Science Based Targets Initiative that offsetting will be part of a viable net zero transition plan. So with that in mind, we have looked at what's in the way for companies getting access to what has been a growing voluntary carbon market. For a corporate buyer, offsetting has been a challenging undertaking. The options were limited to running projects on a merchant basis, which required companies to develop an additional area of expertise and due diligence and run projects on a merchant basis. The other option was to participate in the secondary markets, the voluntary carbon markets, and procure credits there. But that market was lacking the necessary scale and liquidity. So we determined that the solution starts with scaling the supply side of the voluntary carbon market, which means an easier pathway to getting capital for projects that contribute to the reduction of greenhouse gases in the atmosphere and therefore produce carbon credits. With that objective, we have launched our voluntary carbon market, which will enable the listing of funds and companies which will channel the capital they raise into climate mitigation projects and activities and will generate new carbon credits. And these carbon credits will be available to be distributed to investors in these listed entities in the form of either dividend in specie, or they can be retired on behalf of investors or kept as an asset or sold and distributed as cash. So we're creating a pathway into capital markets for more projects that will produce more carbon credits, and at the same time a pathway for especially corporate investors to offset their residual emissions, but doing so by investing in exchange-listed vehicles, to do so undertaking a portfolio-based approach by potentially investing in a number of these vehicles, and do so in a liquid way and have the opportunity to adjust their holdings as their offsetting needs change over time. So we have built this solution based on the success of our existing funds market, which is the oldest and most liquid market in the world, but it continues to innovate. We have had quite a big success with green strategies being offered to investors, especially assets which are difficult to access, some of the illiquid assets, but offered to investors in a liquid way through exchange-listed vehicles. And the voluntary carbon market is the latest addition of our sustainable finance offering, and the entities that will invest in voluntary carbon credit generating activities is the latest addition to our listed funds market that will enable an additional pathway for corporate investors to offset their net zero, to offset their unavoidable emissions.
Thank you for that example of innovation. What's your take on innovation, Namrata?
Yeah, I'll still come back to scalability and cross-sectoral, the need to work more cohesively cross-sectoral. For example, take West Africa, where you have a number of many different mining companies or junior mining companies with single assets, and each one of them is doing what they need to do, but I think given the need to really work together and scale the energy transition, I think they all need to work together. For example, could they be thinking about energy generation, working with energy companies as a 5 or 6 mines that need the energy instead of one company needing 5 to 10 megawatts? Could you think about a larger transition through renewables, for example, while working together? Similarly, infrastructure to mines. We look at mining projects, and again, you need infrastructure, be it rail. Can companies look together instead of putting trucks on the road? Can there be solutions on rail? Is there a way to work with governments and regional governments, or have a regional play versus just a single country play? And here, as IFC, we are able to really work with mining companies, with energy companies and infrastructure companies to bring the innovation together, and you can finance it together as well. So I think scalability and cohesiveness within the industry is needed to really move the innovation forward.
Excellent, thank you. What's your take?
Pretty much, I'm in agreement with everything my fellow panelists have commented on earlier. I would add that when you look at global mining, certainly companies are, also being encouraged to adopt and look at innovation as a means of survival, really. When you consider the increased costs that companies are facing under the current environment, and certainly who knows how long it's going to be, the inflationary environment that we're in. A lot of companies have certainly looked at innovation more so than before, and this is trickling down into the juniors and development stage companies as well. You look at the seniors like Newmont, Barrick of the world have already publicly stated commitments to net zero commitments over the next decade or so. And so we're seeing this at the junior level now. And certainly when we talk to issuers, innovation is seen as not only a means of helping them to gain social and maintain social license in the environments in which they are operating, but also as a means of lowering their costs and really as an input into their survival. And just to touch on a point that Namrata mentioned, also we're noticing as well that companies are being more responsible, more proactive, and in recognizing that they need to be accountable for more of the supply chain, not just their own sector, their upstream end of it. And this certainly will help a lot of what Pavel mentioned a few times in terms of our responsibility in the mining sector to take over the narrative and help our image generally. Because oftentimes people don't recognize that the mining sector has different supply points. And so if companies can accept that responsibility for the entire, more of the supply chain, and ultimately all of it, then it certainly will help our ability to control that narrative that's so important for us. So innovation, of course, has always been important. It's even more so now going forward.
Okay, so innovation for survival, innovation to control the narrative, innovation in the finance. That we need, excellent. I think we now have time for you. If you have any questions to the panel, I think we have a couple of roving mics somewhere. Who has a question? I have a question in the middle of the room. And is it a mic coming to you? No, maybe you need to just shout.
Not on.
Maybe you need to shout a bit more.
We're going to host an invite-only event here in London where to try to look for investors for the battery project in the DRC. As you know, DRC has signed with Zambia on the border to build a battery. The studies have been done by Bloomberg, and everything is in there. But even if we're talking about this transition to greener and clean energy, capital is still very important. So I don't know if someone in the panel or your representative could come and attend to this event and meet the officials and the project, if it's something that you can do.
Okay, so more than a question, we have an invitation to the panel, so we will keep it as an invitation. Thank you very much. I think you have a question in that direction.
When is it?
Thank you.
I wanted to ask a question to Katya about carbon credits. Increasingly, we've seen clients talking about asking questions, how can they earn carbon credits? And that is for a mining project. Asking questions, can a lithium mine earn carbon credits? I don't know what the answer is. I'm just interested to know, how can a miner specifically earn carbon credits? Sorry for the crude question.
Yeah. So if we go back to what constitutes a carbon credit, it's the activity that is not necessarily commercially viable in its own right, but by removing or avoiding the emission of carbon or other greenhouse gases in the atmosphere, that activity qualifies for a carbon credit. And that activity is subject to the verification of the voluntary carbon markets industry bodies that have been developing for decades. And they have developed their methodologies to assess the standard of the generation of this carbon credits. You can look up the ICROA system, the International Carbon Reduction and Offset Alliance, and the standards that are part of that system, including Vera, Gold Standard, and others within this ecosystem. But the solution that I have previously outlined, it really enables a different kind of storytelling, because the problem with storytelling was echoed by my fellow panelists. And what we thought at the exchange is, one thing is to procure carbon credits in the secondary market and just, arrive at some sort of an interim milestone towards net zero. But another opportunity for a storytelling is to enable a new climate mitigation project or a technology to thrive and to produce carbon credit, and communicate that to your investors, communicate this to your stakeholders, and provide to yourself an opportunity to stand out. So I'm not sure if that answers your question, but I think that there are plenty of opportunities to use some of the capital, some of the profit generated to empower new carbon credit generating activities, which would otherwise have very difficult time raising finance.
If I could add to your point, Katya, also if you look at companies like Newmont and Barrick, etc., and their efforts to electrify their operations in terms of haulage vehicles, etc., that's one example of how a mining company can earn credits, carbon credits.
Thank you. Do you have more questions? I think we have time for perhaps one or two more. We have one at the back.
Thank you.
There. Oh, yeah.
Kieran Doyle from the Camborne School of Mines. I wanted to ask in relation to Pavel's point about companies having pressure from the governments, investors and so on, and them needing to make the change necessary to move things forward. What do you think the biggest challenge might be, or challenges, going forward to make that change possible? Thank you.
So the biggest challenge to make that possible is really like I think the eagerness of the mines and of the mining industry to make the change in general, right? Because like every change includes some risks. There is some CAPEX connected to that, and like in the past, like it was not fully recepted by and fully well approached by all of us, right? Because if you invest like hundreds of millions to billions of dollars into a flow sheet, and then like there's a great innovation that changes the flow sheet, you need to basically get your investment sunk and have a sunk cost and change your flow sheet to something else. So it's actually not easy. So even though there is a new technology out there, like explaining to people like how difficult it is to make a change from some current flow sheet that you're using to something else is actually really hard. So I think the true possibility or the I think great opportunity lies in processing something that was unprocessable. When you look on gold mining industry, right, like back in the 80s, 70s, like you could see that there was loads of tailings that were actually having a lot of metal already there, right? But the current technology didn't allow that metal to be processed in the economical way. But due to cyanation, when it was like invented, start being used, like you can actually process that metal in the economic way and also in a sustainable way. And there are other things like that out there that are targeting on low-grade ore, like on oxides, on like chalcopyrites, like on basically lower-grade ores that are out there, sulfides, that are actually so efficient and using chemicals that are environmentally viable, sometimes even edible, and that can be actually recycled in the process, which is moving the needle on like what makes sense to process, right? So your OPEX goes down, the metal costs the same amount of money, so you can actually process a lot more from the same asset and process the tailings. So you don't need to change the flow sheet because you can focus on something that's already in your backyard. So you can save your money on opening up new mine, increase the current throughput from the existing asset, and actually like even extend the lifetime of that asset, which is fundamentally increasing the value of the company and of the asset itself. So I think the low-hanging fruit is really in that space of basically processing something that was formerly unprocessable and applying technologies there. And on the new asset, of course, like if it's a new mine, like if it's a new asset, you can apply a technology that's already out there and really take some high risk. But like changing the flow sheet is not an easy thing to do. So that's the biggest, I think, biggest roadblock on applying something new on the existing assets.
Excellent. Well, thank you for your questions. I think we have just enough time to ask our panelists one practical takeaway for the audience. Would anyone like to start? Katya.
I think that what will really separate the leaders from followers is how much you use your investors as a resource. And using them as a resource means engaging with them proactively, seeking their input, and then engaging them in an ongoing dialogue, really forming a long-term partnership. And the reward at the end of this exercise, or rather in the process of this exercise, is procuring your ability to procure capital at the lowest possible cost.
Excellent. Thank you. Namrata?
Yeah, I think collaborate and use innovative financing as well in the collaboration and working with multi-stakeholders So collaboration and financing innovatively, whether it's green loans or bonds or sustainability-linked loans, and just really, try to, that will get your narrative as well, the point that Pavel made. Maybe that will also help the industry get the good news out there and help companies and others learn from each other. So collaboration and learning.
Excellent, thank you. Dean?
I think just to take away that we've come a long way, the mining sector has, when you consider the past 4 years. I think we have gone from the point of being the villains completely to a point where certainly I think there's a lot more, there's been a great improvement in how we're perceived. Certainly I think there's a recognition that the mining sector is important in the energy transition and ambitions globally. And I think the key takeaway is the mining sector is rising to that challenge, I think, and being more accepting that we have to be more responsible in the way we operate and also be accountable for our own operational net zero objectives and reducing our impact on the environment as we operate to create the inputs into the energy transition. And so I think the key takeaway as well is that our communication has been improved, and certainly at our exchange, the Toronto Stock Exchange, we're doing a lot to help companies prepare and communicate with investors, because it is important, as Katya mentioned, that investors are demanding more. And so we see a significant importance to prepare investors. And one of our programs that we have to help mining companies communicate with investors is our Growth Accelerator program that we offer to mentor and instruct and offer our significant resource to companies to meet those investors. And this is offered to both private companies considering listing with us and companies already listed with us, and it's included in our offering.
Thank you, Dean. 5 seconds, Pavel, they're kicking us
Yeah,
out.
just do more with less and try to get use of the technologies that are out there in your flow sheets and in your assets.
Excellent. Thank you so much.
Thank you, guys.